So come back to here, right? It's actually that I pay 100,000 only,
But
I
you
gain extra
120.
So I get extra 20,000 some more. And then if anything happens, I didn't manage to surrender, that happens, the payout of the 5,000 still pays out.
How MLTA can actually be also one of the tools to help you save up some money.
500,000, 35 years old guy for 35 years MLTA.
So how much the premium is going to be? I'm going to cover myself until 70 years old.
So basically for MLTA, if I'm the one actually proposing to you, right, I'll actually give you a few options. I have one option which is, we call it an investment related based kind of product. One more is my signature dish. My signature dish is something that you pay the MLTA, right? As you pay, right? If your criteria is something like me, below 40, young, healthy, non-smoker, I can tell you that if you pay this insurance plan, right? Because this insurance plan, one of the benefits is that the MLTA is that it's a guaranteed return. The MLTA chart that you have in the insurance illustration is always something like this one. Okay, you have a name, then this is your premium. Let's say it's 5,000. They'll show you 5,000 every you pay. Then at this part here, for those who always see insurance quotation, you know there's a 1, there's a 2, and then this is like 2% return, this is a 5% return, and then this is the surrender value at here, right? Okay, so this one is like what a lot of people actually sell, which is an investment related kind of MLTA. So there is actually a investment related value. My signature dish, right? There's no 1 or 2, no projected 2% or 5%. It's a guaranteed return surrender value. So this surrender value, right? How it works is whatever figure is showed here, right? Future the insurance company, how good or how bad they're doing, right, won't impact you because they pay out this thing, right, is follow the contract because it's guaranteed. So if the insurance company is performing very well, so sorry, they don't give you anything. They'll just pay you out if you surrender policy as of the year. No more, no less. But the investment one is through tough and through hard moments we suffer together. So the return will be based on projection.
So to summarize a bit, so investment link, it's not guaranteed return, but it can be good, it can be worse also, right?
Yes, it depends on what the funds the banker or the insurance agent actually put. So each insurance company has their different kind of funds and it will be monitored by a fund manager.
I see. So it's all subject to the fund performance.
Today, I'm not going to actually tell you about the investment thing. I'm going to tell you more about my signature dish. Okay, so this chart here, right? Let's just say, okay, really 500,000 for a 35 years old guy like me. I pay for 10 years, meaning I use 50K already. I pay 20 years, meaning I pay 100K. So my signature dish, this plan, right? By far, I think our company has, and maybe, I don't know, fact check me if I'm right or wrong, but I think as of now, I think maybe just our company has this signature dish. We are the only remaining one that has this 2 by choice. The rest, they don't want already. So this signature dish here, right? The guaranteed return. So let's say assuming you paid already for 20 years, right? 100,000. The signature dish here, the amount is actually, let's just say like 120,000. So which means, right? If today I borrowed a 35 years loan, pay for 20 years, if I'm about to surrender a policy because I cannot pay the thing, right? I can surely know that this 120,000 is guaranteed already. Right? So come back to here, right? It's actually that I pay 100,000 only, but I gain extra
120.
So I get extra 20,000 some more. And then if anything happens, I didn't manage to surrender, that happens, the payout of the 5,000 still pays out. So how this summer work, right, is for a lot of my clients who actually they know how to better plan their financial for future one. Because this guaranteed return here, right, the figures here is already written out already, guaranteed in the policy contract and also the quotation. But they know is that when they pay the 5,000 for 35 years, right, they don't want to actually pay for 35 years. If they can, they want to actually early settle. So sometimes they actually want to just pay like 25 years or 20 years, then they want to settle already. So because if you have this app in your iPhone or your iPad, right, you can actually have this loan calculator. You can actually press the same thing, 5,000 sum assured, 35 years, follow your bank rate, the effective rate. And then after you calculate, they'll show you your monthly installment you're going to do. But the keyword here is to press the amortisation button. Amortisation button is something that banks don't show you, but you can actually see for yourself. So assuming you're paying this same amount and the interest and loan didn't change, you can actually predict how much is the outstanding for the future. So with this tube high choice here showing you the guaranteed value, right? Not to say 20 years, maybe at the 25 years, right, you paid already is 125K. Maybe this surrender value here is, let's just say 180K. This 180K, right, maybe at the 25 years, right, your bank's outstanding, right, is actually around this amount already. So you can actually offset this policy, take the money and settle off your bank outstanding loan, which means you save plus minus 10 years worth of bank's interest. And then people asking, of course, I paid so much already, sure, got the money, but did you actually lost a penny? Actually, you don't really lost because why? Whatever you paid here, right, you're actually getting back more with interest are more. And this 2 by choice that I have, right, I mentioned just now, if your criteria, if you're female or male, less than 40 years old, non-smoker, right, at the 15 year or at the 16 year lah, whatever you paid here, right, the surrender value is already break even. Which means on the 17 year onwards, right,
Whatever
whatever
I
insurance
paid,
you're paying,
I get
right,
back.
you're getting free insurance. Because at any time you choose to surrender, you tak rugi any single cent. And one more thing is that, just now you mentioned, if I can predict 25 years, I can forecast already, can offset, is better. But even better if like you want to pay and you finish 35 years, then the extra money, it's not only 20,000 that you get, it's more than that.
But you know what? One a good illustration this one, right? Meaning that even though I pay for 20 years or 30 years, I still haven't paid until 500,000. If anything happens to me, touch wood, I pass away or permanent disability or whatnot, the payout is 500,000, right? That's the beauty of MLTA, that you're using this as a leverage.